Hey everyone, Coach Investor back to another video for today, and it's the first earnings video of, the upcoming earnings season. We're going to talk about TSMC, and after this video, it will be pretty clear why Warren Buffett has a huge stake in that company. So they reported earnings this week. Stock is up around 7.58% or so throughout the week, of course, because we had a great week overall for the market. That probably contributed as well. Now, for TSMC, basically what they do is they build the best chips around the world. All right, there's no sugarcoating this or that, but there is also the risk of them being, well, you guessed it, in Taiwan. But that's maybe why they are building, new locations in Arizona. Because if, let's say, worst case scenario, something happens between China and Taiwan, then they can leverage that with their US location, and probably this might also push the US to actually do something in Taiwan. But as of now, those are just speculations and risk you have to keep in mind. So let's jump into the earnings report. If you enjoy this type of videos, I would really appreciate it if you can hit that thumbs up button and subscribe if you have not. And if you want to support me and this channel, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to full.com/couchinvestor. All right, so first of all, I really love the way that they report their earnings, the platform revenue, each and every segment, 5 nanometers, 7 nanometers. It's great visually. It's the best way to understand how the company is actually doing. But as of now, we can see here net revenue in billions, just short of $20 billion. So they missed it with their guidance a little bit from the top side. But then when it comes to gross margin, they beat on that 62.2%. Operating expenses, of course, it is way up from 2021. We're going to have a talk about that in just a second. Operating margin 52%, beat on their own guidance as well. Net profit margin of 47.3%. It's up 9.4 percentage points year over year. And now if we look at return on equity, 41.7%, that's up 10.4 percentage points year over year. Now, if we scroll down, we can see here Q4 revenue by technology. So 7 nanometers is now at 22%, 5 nanometers, 32%, and 16 at 12. But what will be more interesting is when we compare both years, 2022 and 2021. You can clearly see that the 5 nanometer platform is taking over the majority of, well, not the majority, but it is growing when it comes to the revenue by technology. 2021 was at 19%, now we are at 26%, and you can see that 7 nanometers has decreased from 31% to 27%. Now, when it comes to revenue by platform, for Q4, we can see that high performance computing is at 42%, smartphone 38%, so basically those two segments made the majority of the revenue here, but we can see some interesting thing here. So, first of all, smartphone is decreasing. You've probably heard the news already with regards to Apple, for example. IoT is down as well, quarter over quarter, that is 11%. Automotive, not surprising there at all, up 10%. HPC, up 10% as well. DCE, that's down 23%. But as you can see here from the revenue side, it's only 2%, so not that big of an impact. And then when you look at 2022 revenue by platform, you can clearly see that the growth has come from basically everywhere. HPC up 59%, smartphone still up 28%, IoT up 47%, automotive 74% year over year growth. DCE, as we've seen, is just up 1% with that huge decrease that we've seen before. And then others is up 51%. Now, as for the full year review, it's pretty clear to see that 2022 was a much better year than 2021. Not just only if you look at gross margin or operating margin, but if we go even lower, we look at free cash flow. Free cash flow is up 93.4% year over year. Cash dividends, that's up 7.3%. Okay, but then if you look at operating cash flow, it's up 44.8% year over year. CapEx is also up close to 30%. And I believe they said that they expect to spend, the CapEx budget for 2023 to be around $34 billion. And why is that? Why is it so high? Well, because demand is just so high. And so if you look at their guidance for the next quarter, we see here that they expect revenue to be between 16.7 to $17.5 billion. I believe the consensus was around $17.7 billion, so a small miss, but we'll see what happens. And then based on the exchange rate assumption, they see gross profit margin to be between 53.5 and 55.5%, operating margin between 41.5 and 43.5% for Q1 2023. And now we've got some information with regards to TSMC Arizona. So it has started the construction of a second fab, which is scheduled to begin production of 3nm process technology in 2026. The overall investment for two fabs will be approximately $40 billion. Now, even TSMC has said it themselves. In Q4, they were hit by lower demand because of the current macroeconomic environment, high inventories by its clients. So first, they will try to clear their inventory before, obviously, they order even more. They probably expect a bit of the same in 2023, but in my opinion, things would probably get a little bit better in the second half of the year. Again, let's wait and see, but as of now, TSMC is probably the best of breed out there when it comes to, well, the semiconductor industry. Of course, we can talk about ASML. We've talked about ASML in the past on this channel, but ASML, of course, is a player in the semiconductor industry, but you cannot really compare it with TSMC because ASML provides TSMC with equipment. So it's even one step before that. Of course, it also trades at a premium because it basically has a monopoly in that semiconductor industry. With TSMC, there are other players in that field. Samsung, for example, Global Foundries, even a company I never heard of called Tower Jazz or something like that. And then, yes, of course, in the future, Intel probably will be a player in that field as well. But as of now, if you want the best chips in the world, probably go and order at TSMC. That's probably also one of the reasons why Warren Buffett bought shares when he did. Also, probably because the shares were already so low, but because the company fundamentally is extremely strong. The product, the service that they provide is the best of the best. And now before we end this video, as always, let's have a quick look at the graph. So of course, the stock is up 43% since the lows back in October. Now, because of the earnings, we have a little gap right here around the $80 mark. Let's see if that gets filled. And right now we are also over that 200-day moving average. It was a big green candle, big green week that we had. Let's see if we can double down and have another great week, because earnings are starting. So a lot of things it can create a domino effect. Lots of good earnings report will probably show strength in the market. Lots of bad earnings reports, especially bad guidance, weak guidance, let's say, maybe not that great. But when it comes to technicals here, purely RSI is at 58. So, okay, a bit higher than the, let's say, neutral point. And then we look at the MACD, still pretty bullish, on its way up to the 0 point right here. So overall, if you're a TSMC shareholder, you probably are very happy with the current state of the company, probably better days ahead as well. Right now, of course, everybody's going through their inventories, a bit of slower demand. But overall, if you're a holder of this company, you know that you're holding shares of a pretty damn good company. Now, of course, do share your thoughts down in the comments below. What did you think about this quarter and the guidance? Maybe the current state of the semiconductor industry. Let me know down in the comments below. And if you enjoyed this type of videos, leave it a thumbs up and subscribe if you have not. And I'll see you all in the next one. Bye bye.